Hello everyone, my name is Sophia Lee.
My name is Jisuan. Today we'll be presenting our investment case on Sandstorm Gold.
We believe that Sandstorm is a strong buy for these reasons. Firstly, Sandstorm has an incredibly powerful business model with twin optionalities to exploration and gold price appreciation. Secondly, we're extremely bullish on gold, and we believe the macroeconomic conditions are favorable to gold. Thirdly, Sandstorm is a growth-focused company that can grow earnings significantly, even in a flat gold price environment. And lastly, adding Sandstorm Gold to your portfolio has significant diversification benefits with a low beta of royalty companies. Therefore, our 3-year target price of $27 represents a significant upside of 360%.
Sandstorm Gold is a gold royalty company with 190 assets globally. In return for providing money to gold mining companies, Sandstorm receives a share of royalty income and gold streams at a discounted gold price. So what are gold royalty companies? Gold royalty company operate based on a contract where a gold royalty company receives a percentage of revenues or gold production in return for upfront payment. Royalties are notably different from streaming companies. Instead of receiving a percentage of revenue or gold production, streaming companies purchase all or part of gold at a predetermined price. This price is set lower than the current gold spot price. The royalty or streaming companies then can sell the gold for profit at the current market value. In this chart shows how gold royalty companies are better investment than physical gold or gold mining companies. Not only are there zero capital expenditure costs, but royalty companies also have a free exploration and expansion upside, which we'll explain more further on. In summary, gold royalty companies represent an attractive return to risk profile. The gold royalty companies sit between the gold operating companies and physical gold price in terms of risk.
The first reason why we believe Sandstorm is a strong buy is because of its incredibly powerful business model. Not only is it unique and proven, but they also have a twin optionality to exploration and the gold price. As a debt-free gold royalty company, Sandstorm's asset-light business model provides a diversified flow of royalty income from over 190 royalty streams globally. It's unique in the sense that Sandstorm does not operate the gold mines. There's no maintenance or capital expenditure costs, and it's also free from political or environmental risks. In addition, Sandstorm does not explore for new mines directly, which is often capital intensive and risky. Instead, Sandstorm has a broad and diverse portfolio of royalties and streams, whilst minimizing direct involvement in operations. A crucial part of Sandstorm's business model, which makes it truly powerful, is the free optionality to further exploration. When Sandstorm buys a royalty, what they end up with is a perpetual option on the discoveries made by the operators of the land. When they buy a royalty on a piece of land where, let's say, there's 5 million ounces of mineable reserve, in 90% of the cases, the company will mine those 5 million ounces, will discover another 5 million, and will mine another 5 million. But for the shareholders, all you've paid for is the first 5, and you get the second for free. This chart here shows the industry leader, Franco-Nevada, and it shows how this business model is proven to be successful. Even when the gold price is flat or down, Franco has tended to outperform regardless. Shown in blue, even when the gold price is up, Franco-Nevada shows how leveraged earnings can be to the gold price, outperforming both gold mines and physical gold. It is a free perpetual option to equity shareholders. The second reason why Sandstorm will make a great investment is because of the macroeconomic conditions which are favorable to gold. Gold has been a store of value and an inflation hedge for centuries, for 2 main reasons. Firstly, gold is traditionally a good monetary asset, and this history makes gold appealing and a safe haven in times of crisis. Secondly, the value of gold cannot be debased by governments or central banks. Therefore, when investors lose confidence in fiat currencies, such as the US dollar, gold and other commodities tend to gain a currency premium. And right now, we are in a time of crisis. The COVID-19 pandemic has caused governments around the world to embark on fiscal stimulus. As shown in these graphs, the US fiscal deficit is expected to widen to 18% of GDP in 2020, and increasing quantitative easing programs by central banks has pushed the Fed and ECB balance sheets to almost $6 trillion US. This is unprecedented and extremely positive for the outlook of gold. If concerns regarding future inflation and dollar weakness continue to grow, investors may turn to gold and other commodities as a store of value, thereby increasing the price of gold.
In summary, there are many demand drivers and supply pressure on gold, as shown in this chart, which are likely to drive the gold price up. We're very bullish on gold, as this graph shows the potential exponential increase on gold price if it follows the bull market pattern from 1970 to 1977. If the gold price were to follow this pattern, the Sandstorm share price could also be exponential.
The third reason why we believe Sandstorm is a great investment is because of its growth-focused management team. Sandstorm has consistently grown every year since the company was founded. Their strong track record of success positions Sandstorm as a company with high growth potential, even in a flat gold environment. In a span of 9 years, Sandstorm has increased their revenue from $3 million US to $89 million US. On top of this, future gold mine projections are expected to rise by 115% by 2023, which will enable the company to reach its 2023 free cash flow forecast of $140 million US. Sandstorm's management team are superb in that they are run by CEO Nolan Watson, who was the former CFO at Wheaton Precious Metals. Nolan Watson has 60% of his personal net wealth in Sandstorm stock. He's clearly aligned with shareholders.
The fourth reason why Sandstorm Gold is strong buy is the diversification benefits of adding the stock into an investment portfolio. Gold has proven to provide diversification in portfolio due to its low correlation to other financial assets, as shown in this graph on the left. In fact, by having 5 to 10 gold in 60 to 40 balanced portfolio, returns have been enhanced and volatility reduced.
Now moving on to the financial analysis and valuation. As shown in Morningstar's analysis, Sandstorm is undervalued by 14%. In addition, as shown by the EV to EBITDA multiple of 9 times, Sandstorm are projected to continue trading at a discount relative to the sector. Although Sandstorm's consensus forward PE ratio seems high at 68, their large EBITDA margins, which are over 70%, projected growth, and asset-light business model reflects the high moats and defensive qualities of the royalty business. In addition, Sandstorm's asset base is diversified. The company is debt-free and free from operational and financial risks associated with gold mining, with zero capital expenditure, hence the high absolute valuation compared to the market. Our target price for Sandstorm is $27 US. We calculated this by comparing Sandstorm's forecasted cash flow yield to the industry leader, Franco-Nevada. However, to be on the conservative side, we assumed a 50% discount to Franco-Nevada, valuing Sandstorm at $27 US, representing a 3.6 times upside from the current share price. Note that this is assuming a flat gold price.
There are 4 investment risks. First, if the gold price falls, then this could impact the gold mining revenue and therefore the gold royalty and streaming industry. Second, these junior mines could pose a risk as they are smaller companies that may have less experience and lack of financial resources. Third, Sandstorm has a high PE ratio, which shows that Sandstorm is quite expensive. Fourth, political, tax raises, or environmental concerns could pose risks to the gold mining companies.
We believe Sandstorm can triple from the current price because of new mines and new royalties coming on stream, even when the gold price is flat. Not only does Sandstorm have an option on gold mine expansion, but they also have an option on the gold price itself, which if it follows the 1975 gold pattern as shown here, Sandstorm's share price could increase tenfold. How many companies can you buy that's seeing positive earning upgrades, has the potential for tenfold returns, or limited downside? Therefore, to quote Pearson, this business model of stable royalty income plus free upside optionality is potentially the most powerful business model ever created. I should agree that Sandstorm Gold is a strong buy. Thank you.
Thank you.